Insider trading and the manipulation of our wealth. In life, there are no shortage of laws to follow. For most of us, as children, we readily question others' perceptions of right and wrong. But as adults, we all too often fail to do the same. We no longer question the prescribed truth. We accept thought-terminating clichés rather than utilizing our own logic and reason. And we abide by social norms and obligations simply because we place too much value in others' opinions. What if I shared with you an example where others don't have to follow their own rules? What if I told you they were outside the system, but they would confiscate your health and your wealth for merely walking in their shoes? Would you begin to open your eyes and see things a bit differently? What exactly is insider trading? Insider trading is defined as the act of trading securities by individuals with access to non-public information. Although insider trading was by and large made illegal under the Securities Exchange Act of 1934 and the subsequent amendments to it over the years, our Congress and other high-ranking government officials are not required to abide by these insider trading laws themselves. The public servants we entrust to form our nation's laws are once again exempt from having to follow their own rules. Rules that if you and I broke, we would be sent straight to prison. The only legal insider trading is congressional insider trading. How does insider trading affect the economy? Have you ever played a zero-sum game? For those of us who have friends and family who frequent Las Vegas, Nevada, we are intimately familiar with the concept. A zero-sum game is a game in which one individual's gain is equivalent to another's loss. In other words, I only earn $1 if you were to lose one. In Vegas, this is called gambling. In investing, this is called the stock market. Now imagine you and I are at a poker table, and everyone is prohibited from looking at anyone else's hand besides their own, except for one person. And all he can do is win. Just how long do you think you'd want to play that game? This is not merely just a simple allegory. It is in fact happening every year here in the United States, by the very public officials that we voted for or failed to vote out of office. In 2004, under the Bush administration, the Journal of Finance and Quantitative Analysis published a groundbreaking article that revealed members of the United States Congress who actively participated in the stock market saw an average return 12% higher than the average market per any given year between the years of 1993 through 1998. These same men and women have done very poorly managing the nation's bottom line, but have done quite well managing their own. This is nothing more than cronyism, poorly disguised as capitalism. Why our ignorance has been their bliss. Nancy Pelosi. Many of us are familiar with Nancy Pelosi, as she has made quite a spectacle in the news lately. As the current minority leader for the United States House of Representatives, Pelosi and her husband, Paul Pelosi, have participated in no less than 8 initial public offerings since the inception of her career as a politician. While there is nothing wrong with participating in an IPO organically, it is the manner in which she has that should be a crime. On March 18, 2008, Pelosi and her husband, Paul Pelosi, purchased 5,000 shares of Visa at a cost of $44 per share for a total investment of $220,000. Coincidentally enough at the time, the Credit Card Fair Fees Act had been introduced to the House of Representatives, where it was currently waiting to be brought to the floor for a vote. Had the act passed, which it never did, thanks to Pelosi ensuring it never reached the floor, credit card companies such as Visa would have seen their interchange fees cut drastically. These fees are a very important source of income for credit card companies, as the fees range from 1 to 3% of the total purchasing price of anything that we buy using our credit card. 2 days later, on March 20th, Visa shares had climbed to $65 per share, which resulted in an unrealized gain of $325,000 for Pelosi. At today's current price of $124.53 a share, Pelosi's shares would have an unrealized value of $622,650. Not only did Pelosi have insider knowledge as to the fate of the Credit Card Fair Fees Act, She was instrumental in ensuring that it never came to the floor for a vote. She used her position of public trust to profit for her own personal gain. And this broadcast has not even covered the 7 other IPOs she has participated in since taking public office. At a net worth of over $29.35 million, it is hard to imagine how a public servant could become so wealthy. Let us now move on to some more examples of insider trading. Dianne Feinstein. One of the more famous insider trading scandals in recent history was that of Senator Dianne Feinstein, who used her position of trust within Congress to exploit the U.S. stock market. Senator Feinstein invested $1 million into Ameris Biotechnologies, an alternative energy company focused on plant-based renewable fuels and chemicals back in 2009. The Feinstein's $1 million investment was their only stock market transaction for the entire year, but a very timely and profitable one nonetheless. Similar to Pelosi, who had intimate knowledge that the Credit Card Fair Fees Act would never reach the floor by her own hand, Feinstein also had non-public information at the time regarding Ameris. This non-public information came in the form of a $24 million grant that Ameris was to receive from the Department of Energy 2 weeks later from the date of her initial investment. Ameris went on to release their IPO and go public the following year, and raised roughly $85 million in the process. This is not Feinstein's only skirmish with exploiting the stock market through the use of non-public information. Back in April of 2009, Feinstein had introduced a bill in order to raise $25 billion for the Federal Deposit Insurance Corporation in an attempt to assist the FDIC in the number of mortgage foreclosures it was facing. What was not mentioned, however, was that C.B. Richard Ellis Group, the commercial real estate firm that her husband, Richard Blum, heads as the board chairman, had won the competitive bidding for the contract to sell the foreclosed properties that the FDIC had inherited from the failed banks. Are we beginning to see a pattern? Maxine Waters. One of the more recent insider trading scandals revolves around Maxine Waters. Unfortunately for her, very little of her newfound fame is positive. In August of 2010, Maxine Waters, the 10-term Democratic incumbent, was charged with 3 counts of violating House rules and federal ethics in relation to her involvement in privately introducing Treasury officials to C-level officers of United One Bank. Waters, who interestingly enough sits on the Financial Services Committee, prevented One United Bank from declaring Chapter 7 bankruptcy by arranging a personal meeting with Treasury Secretary Henry Paulson to ensure the bank would not go under. Had One United Bank collapsed, Waters and her husband stood to lose $350,000 in their stock investments. Fortunately for Waters, One United received a timely $12 million bailout prior to such a tragedy occurring. While other investors were placing their trades in anticipation of One United declaring bankruptcy, Waters simply funneled federal funds to them, not because she thought the bank was too big to fail, but that she was too big to fail. Naturally, the company's stock has been on the rise ever since. Another example of favoritism by Congress to further their own greed. What's unfortunate is that the list goes on and on. Yet remember, it is not a crime for members of Congress to trade using insider information, or apparently even to manufacture the outcome. Maybe it is time to take a close look at exactly who is writing our nation's laws. How are insider trading laws enforced on Congress? On April 4, 2012, President Barack Hussein Obama signed into law the Stop Trading on Congressional Knowledge Act, more commonly referred to as the Stock Act, in which it now became a federal crime for members of Congress to place trades using non-public information. The bill was originally written to explicitly prohibit the use of insider information for private profit and required government officials to disclose securities transactions within 45 days as opposed to the previous requirement of 1 year. Unfortunately, however, the bill was silently gutted under much less fanfare and media coverage than the original passage of the act 1 year later, and things are really no different than they were before. In April of 2013, Congress quietly rolled back a significant part of the law that mandated government officials to report any securities transactions within 45 days. With the public no longer possessing this degree of visibility in relation to the securities transactions of our government officials, it is once again much harder to uncover any insider trading that may be going on currently. If anything, it is rather comical that the Stock Act passed with near unanimous support during an election year where confidence in Congress had reached another all-time low, only to have key provisions silently repealed the following year. Where we go one, we go all. We truly live in interesting times. While it may feel like time immemorial since we have had to tolerate their political corruption and backroom deals at our country's expense, that paradigm is already beginning to shift. President Donald J. Trump will finish what John F. Kennedy started. Our economy will continue to become further decentralized, restoring the power back to the people and not the government, and the omnipresence of the internet and our shared beliefs will continue to grow until those in office can no longer escape answering for their crimes. Remember, the Bible says that the weeds must grow up with the wheat, and that the harvest is nearly upon us. Thank you for listening, and God bless.